Hello traders and welcome to the London Forex Broadsheet's daily wrap of the markets for Wednesday, October 1st. The euro tested the 1.4070 area during the Asian session, which has acted as an important swing point but failed to break lower and strengthened to 1.4170. The pair eventually fell back to 1.40 in New York but held as oil made a bit of a comeback. In economic news, the unemployment rate for the euro area rose to a higher level than expected, 7.5% versus analyst expectations of 7.3%. German retail sales rose more than expected by 3.1% compared with the forecasted 0.5%. At the same time, the previously released number was revised higher from negative 1.5 to negative 1%. The euro made a slight move lower today as it found support around 1.3970. The pair is below the 90 moving average, meaning it is ripe to sell. If a financial rescue plan is not passed, expect to see the major pairs fall back in the channels like what was seen last week. The pound traded in a tight range during the overnight sessions, but hit a fresh low in New York just after the ISM was released. From there, the pound picked up about 100 pips as the dollar lost favor with investors. In economic news, the UK manufacturing PMI contracted for a fifth consecutive month in September, reflecting some fears that the UK economy may be facing a prolonged recession. According to the PMI report, the 41.0 read shows the manufacturing sector is in the biggest contraction phase since 1998. During the last 3 months through July, the UK index of services remained unchanged. This is the first time the index has not increased since 2002. The pound is held below its 20-day simple moving average and is forming a descending triangle. The horizontal line comes from lows seen in mid-September. Historically, the pair tends to break to the horizontal line. The Aussie moved higher during both the Asian and European sessions and managed to break above the neutral pivot point at 79.65. The pair continued to gain in New York as the dollar lost favor after the ISM report showed that manufacturing in September fell to its lowest level since October of 2001. In economic news, Australian manufacturing activity fell for a fourth consecutive month in September. Production fell again in September, though at a slightly slower rate than in August. Employment also fell for a seventh consecutive month. Inventories rose marginally and supplier deliveries fell slightly. The Aussie is trading deep into sell territory as can be seen from the 90 moving average. The pair has worked its way into a descending triangle with support found at 0.7850. The CAD fell 30 pips during the European session after failing a test at the high of the previous session. The pair hovered just a few pips above the neutral pivot point at 1.0575, but rose well off the day's lows in New York after the weekly oil inventory report indicated that demand for gasoline and other finished products was continuing to weaken. The loonie can be seen working its way into a cup and handle formation on the 1-hour chart. The pair was rejected at 1.0660 and went into making the handle. It is likely that orders are piling up to buy after the pair breaks that area again and could see a sudden surge upward. The Swissy closely followed the euro and the pound and moved into a tight range. The pair was not able to break out of the 40-pip channel it had developed during the Asian and European sessions, but declined in New York when equities moved lower. The Purchasing Managers Index showed the industrial sector contracted in Switzerland. The PMI number was released at 47.8 versus analyst estimates of 51. The Swissy found support today at 1.1145, while 1.1270 stood as a roadblock higher. The pair is trading above the 90 moving average, suggesting that long is the way to trade at this time. The Japanese yen moved in an 80-pip trading range during the overnight session, trading between two important resistance and support areas: the 20-day SMA at 106.30 and the 200-day SMA at 105.95. To the downside, the 200-day moving average acts as strong support, while to the upside, the 20-day moving average stops the pair from any future gains. In economic news, the Japanese Tankan survey revealed that business sentiment has turned negative for the first time in 5 years. The large scale posted a reading of -3, which is the lowest reading since June of 2003. This is also lower than analyst expectations and was down from a reading of 5 for the second quarter. The survey projected a -1 for the outlook of the fourth quarter. The yen is being very characteristic: wild swings, no follow-through, and little direction. Where do you go with this? The pair will need to see some positive trade in the equity markets to get back on track. On the upcoming economic calendar, we have 3 top-tier releases scheduled for tomorrow. At 0200 from the UK, we have the Nationwide House Price Index. At 0830, the Eurozone will be having a press conference. And also at 0830, the US will be releasing unemployment claims. In Asian equities, the Australian S&P ASX advanced 194 points or 4.22% to close at 47.94. In European stocks, the German DAX slipped 24 points or 0.42% to close at 58.06, and the UK FTSE gained 57 points or 1.17% to close at 49.59. On Wall Street, at the close of floor trading on the New York Stock Exchange, the Dow was at 10,831 after losing 19 points or 0.18%. The S&P closed at 1161, down 3 points or 0.32%, while the Nasdaq finished trading at 2069 with a loss of 22 points or 1.07%. Crude oil for October delivery was recently trading down $2 or 2% to $98 per barrel. Gold futures for December delivery were trading up $11 or 1.31% to $886 an ounce. In Treasuries, the yield on 10-year notes fell 7.3 basis points to 3.742%, while the 2-year notes yield lost 14 basis points to 1.819%. Overall, the markets were relatively quiet as traders waited to see the results of the Senate's vote on the modified bailout plan. A vote is expected sometime after 19:30 this evening. The modified version contains new provisions on taxes and will allow the FDIC to borrow unlimited funds from the Treasury and raise the limit on insured accounts to $250,000. The Senate is hoping that changing several parts of the bill will increase the odds of its passage in the House of Representatives, where the original measure was defeated Monday. In economic news, ADP reported the economy lost 8.5 thousand jobs in September. This was less than the 55,000 expected. The ISM reported that manufacturing contracted in September. The 43.5 reading was the lowest since October of 2001 and indicates that the economy is edging closer to an outright recession. The weekly report on oil inventories said that demand for gasoline and other finished products continues to weaken. This concludes the London Forex Broadsheet's daily wrap of the markets. We appreciate you making us part of your trading day.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services LLC. All rights reserved.